region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, October 7th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets are December corn up a half at 422 and a quarter. November soybeans were up 3 3/4 at 1021 and a half. And December Chicago wheat was up 3/4 at 513 and a half. We are through 4 of 23 settlements for our harvest price discovery for crop insurance. Corn is currently 419 3/4, and soybeans are at 1018. What we know here this morning, Secretary Bessent last week teased that as early as today, we could see a little more guidance on some of these bridge payments for soybean farmers. So it'll be interesting to see if we get any highlights here today. Government shutdown on day 7 doesn't appear like they're getting any closer. A couple of procedural votes scheduled to take place, but nobody's got really any hopes that things are close to getting back rolling here. So it'll be interesting also to follow along with that. And we're supposed to have USDA report Thursday. It doesn't appear that that's going to happen. So we are left with no data. Good morning, guys. Dustin, I guess at the risk of sounding like a broken record, I mean, we're still just, chipping away at our crop insurance discovery period. We've got waiting for headlines on what these payments will look like. And, that's harvest continues to roll along. So what's on your mind this morning?
Yeah. So, interesting. The last couple of Octobers, we've seen this strength mid month. And, last year we had a drop into August, into the 390s, and we finished the October in, the 416 area. So how much money was taken out of ECO payments in 24? How much money was probably should have been there for these crop insurance policies in 23? Both of these months, we saw some periods of strength. Now, granted, we did have this massive dollar rally post-August last year in 2024. So, you could get some natural, post-harvest support that comes into the market once these bushels get locked away. I do worry a little bit that, we're still quite a ways off this low, and the amount of dollars that are not going to be paid today at today's insurance price versus what we were looking at back there in August is actually substantial. So something to kind of consider, as you get to the last half of October, especially if we continue to see support through this month, I think the risk grows for a lot of growers, and it may need to be met with some sort of replacement hedging. Maybe that's cash sales, maybe it's, other strategies on the board. But yeah, you're right now we're still early in the insurance window, so anything goes for what that insurance price can come in at. But it's going to get much more serious, I think, in about two weeks.
Very good. Ben, what's on your mind this morning?
We were just talking before we came on live, and corn's very resilient, considering we're heading into the last 2/3 probably estimated of corn harvest with 99 million acres, low river levels. It's pretty impressive that it's holding water. So I think that what Dustin says resonates, that as we move through the rest of October, the downside coverage gets diluted every day. So we'll, keep an eye on it. But a market that on paper fundamentally looks like maybe it should see some weakness is very resilient. We have a great export book on. Of course, we We did get export inspections yesterday, which were really good. That was great that they did release that as a necessary, or whatever they called it, the terminology, to share with the public. So it was good to see that. And we'll see here as we move forward. I know in the East that a lot of processors still had some really nice basis bids through October 10th, trying to meet their hand-to-mouth needs until they start to get overrun with product. And maybe the growers doing a good job of trying to keep things off the market, and through bagging, through flat storage and things like that, which is credit to their ingenuity. So we'll see how things play out here the rest of the month. But it is a very quiet trade.
Jace, what do you think of these markets? Talking to your guys that you're getting pretty good, harvest results for a majority of them. I mean, it's been pretty good, but what are you hearing?
Yeah, rolling along in Illinois. These markets, it's just the same as everybody else talking here, right? A little confusing. My guess is the market is nervous that corn yield is going to be cut dramatically. That's the only thing that makes sense to me, because I think if we end up at a 182 or 3 or 4 or 5, it's too much corn. So the market, I'm a little conflicted because the fundamentals would suggest corn should start moving back down, and it's just sitting right around these moving averages, and so little conflicted. It's raining in Illinois, so that's good, I guess. Ground's going to soak it right up. I don't know, Dan. I don't have a strong conviction right now either way. I think Ben put it well. It's a quiet trade right now. I think there's a lack of information, right? If we don't have this report on Thursday, we don't have much to trade, new information. So you would think if there's it's not going to matter eventually. I mean, if the government stays shut down for the rest of the year, I mean, the fundamentals of the market are going to play out, right? If we have a lot of corn out there, a lot of soybeans out there, or, the lack of selling to China eventually is going to play out in price. So, but right now it's just not, just no new information. So,
yeah.
I think I was going to add to the yield side, because it's funny. I think I forget it was either Ben or Justin mentioned the benchmark that we've artificially created, because we started at a 188 when they first changed the yield. Everyone's acting like a 180 to 182 is like all of a sudden a bullish number,
right?
And yet we picked up 3 million acres in that frame. So like I don't know. I mean, what is the market trading is the question. Are they trading a 175 yield?
Right.
What are they down to? Everyone says the Iowa yield's not out there, and I would agree. I've heard a lot of 20 to 30 bushels below last year. But like, what's the conglomerate of North Dakota, South Dakota, Kansas, Nebraska, Illinois yields? Northern half Illinois is still pretty good, we've heard. When you start to shift that harvested acre number around for each state, you're still talking easily 800 to 1 billion bushels above the previous all-time record at a 181 national yield. So I think that my personal fear is that the pipeline, the recency bias of downshifting yields just means, it's going to be tight. And we're going to feel something very different if that pipeline gets full and we have low river levels. That's my fear.
Yeah. I mean, I personally think the market kind of makes a lot of sense. I mean, if anytime you have a massive options position that is expiring, we gravitate towards those price levels. And we're like at the price levels where it did take away a lot of money from payments, right? So I think you have this massive expiring set of strike prices below the market that the market naturally gravitates. And I think there's hedgers on both sides of that. The farmers own the put. Crop insurance companies have it the other way, and those are expiring. And I think it's just a natural flow as these policies get bigger and bigger. That's my personal belief. I mean, it happens over and over and over again. And sometimes it happens like right at the end with a really big sharp rally like we saw in some years. This year kind of did it earlier, but I think it'll be interesting to see how we trade after that. And Ben's point about one thing like there's a lot of 15% corn or less out there right now. Like people rush to get, 9% beans harvested, and now we're rushing to get 15 or less % corn harvested. So corn's super storable right now. The market's paying you to do it. So I think the first half of harvest is going to be stored away as much as possible. So I think you're seeing a combination of crop insurance expiring, dry corn being stored, and the economics to want to store it. And obviously we're waiting to see what kind of Trump dollars people are going to get, right? So I just think it's several different forces of why we're here on today's date. The big question, as you guys have already addressed, is between now and March is my fear.
Well, and other things too, like this is the first time we've ever had this large of an insurance policy purchased nationwide because of the increased subsidy. And this is just the 65% subsidy this year. It's going to 80 next year. So it's going to probably continue to grow. But like the numbers I saw were like something like 60,000 ECO policies were sold in 2024. And it's almost jumped about almost fourfold. It's like 230,000 policies. So what kind of impact does that make on not just the expiring put from an insurance company standpoint, but just even the position holders of that policy? Like are they more apt to not sell until after that policy expires, right? Is that why?
I think 100%. Unless you're just like if you had that options position on. I mean, that's how we look at it. Unless you're much higher, right? There's not really the incentive.
Yeah.
So I just think it's a bigger fundamental than maybe people give it credit for.
Yeah, the thing to be looking for, right, is once crop insurance is expired, and then first notice day, end of November, off the December contract, right? I think to get a really good grasp of what this market wants to do.
Yep.
So we were talking before the show, and talked about potential hedging by people who underwrite the crop insurance policies. And I'm just going to throw this out here. I wonder what category they would be in on commitment to traders if we were receiving it, because with the expansion of these policies, the participation will continue to grow.
I bet you'd be a commercial.
Okay.
Because we looked at this for some other programs that we were running. And when you're like hedging on behalf of like business unit, I'm not positive, but I'm pretty sure that's what it would be. It'd be like it could also be maybe even an index fund, because you're hedging for a group, right? So you'd have to get an exemption through the CME hedge exemption, so you could be over position limits on some of these really big insurance companies. So
that's good stuff. We got a couple minutes here. Let's we'll move over to livestock quickly. Ryland, we had another case of screwworm pop up right on the border. So that got cattle going yesterday. And then bear spreading pretty much was the name of the game in hogs yesterday. What are your thoughts this morning?
Yeah, so another screwworm case. I mean, it seems like they're just right here every time we need the market to get saved. We're right at the 50-day moving average, and sure enough, this comes out. I mean, supposedly it was in a calf detected about 170 miles just of the border, just south of the border. So overall, it just seems like we're really kind of waiting and seeing if we can keep holding these support levels. Beef prices kind of came back yesterday. Choice gaining $1.07, select up 259. No cash yet. Obviously, it's early. I think everybody wants to see if beef can finally start to stabilize seasonally. That should be happening. So we've seen this big break. The market's starting to produce this kind of sideways wedge formation, and it could really go kind of either way right now. I think the seasonality kind of lends itself more towards the upside, but we'll see. I mean, it seems like if there's going to be some kind of big liquidation, it's probably going to be at some point, in this next several months, or we just keep on trading the tight supply, and we can see beef markets bounce back. It just seems like we're at this crux, and everybody's nervous about this technical formation. So a little bit of better news on the beef side, so I would imagine try to hold some support. But yeah, hogs, just, kind of a wide range of trade yesterday. Seems just since the hog and pig report, the market's been just in more of a liquidation kind of phase right now. So it feels like you've traded all the really good news, traded the tight supply situation overall. It just seems like since beef market started down, so did the hog market. So I think there is a little bit heavier of a correlation this year than there's been in the past, just because we're at a significantly kind of higher seasonal price than what we would typically see in just a normal seasonal year for hogs. So bellies were down $6 yesterday. Cash held on up 67, but still under a buck level. And I think there's some concern that we're seeing open interest drop, at these levels. So we'll see if we can still hold that 50-day moving average. Seems like hogs probably can, if cattle can at this point. So once again, just kind of following cash and seeing if maybe the liquidation stops. Otherwise, we are at some pretty key moving averages. I would imagine that if we start slipping below that 50-day, we're going to see a pretty heavy amount of liquidation.
Very good. Appreciate the update there, right? Just came into the open. We got December corn up a quarter now, 422. November soybeans are up 4 1/4 at 1022, and December Chicago wheat is down a quarter at 512.5. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.